Hello, my dear students. Hope you guys are all doing good. Hope you guys are all perfectly fine. I hope you're all preparing for your upcoming September 2024 examination in a perfect manner. So, without wasting much of your time, I will directly come to the point. So, like the way we have done MTP and RTP series for May 2024 examination, similarly, I'm going to do now MTP and RTP series for September 2024 examinations as well. And before I go into the detailed discussion, just I want to insist on one more thing. As I have already told you for May 2024 examination that RTPs and MTPs are going to be damn important. The outcome you are able to see in the May 2024 examination, somewhere around 20 to 30% of the marks were directly tested from MTP RTP. So don't do the same mistake again. If you are someone who never looks at MTPs and RTPs and directly go and sit for the examination, that is the biggest mistake you are doing. Don't do that. So before you go for the examination, it is mandatory for each and every student to refer to the RTP and also to refer to the MTP series for sure. 100% you have to do it. Then only you have to go and sit for the examination. So please don't ignore this advice. So having said that, I will not waste your time much further. Directly we'll start discussing now RTP for September 2024 attempt. So this RTP is very simple one. I have gone through it once already. So there are no such major things which require a lot of attention, which require a lot of discussion. We can easily complete it within some 40 to 45 minutes. So let us directly jump into the discussion. So first, as usual, we will start with a case scenario based MCQ. They have given one case scenario based MCQ. Let us try to read, understand the facts, what they are telling, and also let us try to answer the MCQs. So I'm starting reading now. So case scenario, what they are trying to say here. Pluto Limited is engaged in the manufacturing and distribution of furniture. So there is a company Pluto Limited which is actually engaged in the business of manufacturing and distribution of furniture. After COVID, as the number of people working from home has gone up, this customizable range home office furniture has gained a lot of importance. They were able to perform very well over the years, and the same has been reflected in their financial statements. So obviously because of the COVID, there was altogether a revolution in work from home jobs. Because of that, they are selling, this particular company is selling customized furniture. So they have seen a significant performance growth, and the same thing was reflected in their financial statements. That means revenue was growing, profits was growing, everything was looking good on the financial statements. During the year 2023-24, Saha and Associates were reappointed as the auditor. Reappointed, that means what? They are already been the auditor, but once again they have been reappointed for the financial year 2023-24 as well. The new engagement team contains CA Saha, who is engagement partner, and 5 article assistants. So totally 6 people are there in the engagement team, 1 engagement partner and 5 engagement team members, article assistants basically. Given the large volume of the transactions, the partner instructed the article assistants to review the financial statements and auditor's report from the previous year 2022-23. So engagement partner advised his engagement team members, boss, before we start doing the audit, please refer to the previous year's financial statements once, and also please go through the auditor's report of the last year to gain a thorough understanding. Okay. While reviewing the summary page, one of the article, Kabir, noticed that few points were under discussion with the partner before finalizing the audit. Okay, after that they have proceeded with the audit. They had some observations. Those observations, one of the article assistant is discussing with the engagement partner. The team verified the following points with respect to employee benefit expenses. So now they are talking about their observations. Whatever their audit findings are there, they are now focusing on what are the findings from this particular audit. The team verified the following points with regard to employee benefit expenses. So this team has verified employee benefit expenses. Regarding the employee benefit expenses, they are telling their observations. The employee benefit expenses recorded in the books were actually incurred during the relevant period. So what assertion is this, guys? Employee benefit expenses is a P&L item. It is an expense. For expenses, what assertions will be there? Occurrence assertion will be there. Completeness assertion will be there. Cutoff will be there. Measurement also will be there. Yes or no? What do you mean by occurrence? Occurrence means whatever incomes and expenses are there, that should have actually incurred. Completeness means what? All the transactions have been included, nothing has been excluded from the books of accounts and financial statements. Then cutoff. Cutoff means what? Whatever incomes and expenses that are recorded in the books of accounts and reflected in the financial statements, they belong to the current year only. Neither the previous year's expenses nor the future year incomes or expenses have been included in the current year. And then finally measurement, that incomes and expenses have been stated at correct amount. So now in the first point, they're telling that the engagement team has verified whether employee benefit expenses were actually incurred or not. So what assertion is this? This assertion is actually occurrence. So they have verified by doing this step, they are verifying which assertion? Occurrence assertion. The expenses in respect of all personnel have been accounted. Each and every expense relating to each and every employee has been included. Nothing has been missed out. This is what assertion? This is completeness assertion. Okay, then the expenses recognized during the period are pertaining to current accounting period. The expenses belongs to the current year only. This is what assertion? This is a cutoff assertion. So regarding employee benefit expenses, the engagement team has obtained evidence regarding three assertions: occurrence, completeness, and cutoff. So regarding this employee benefit expenses, there is one question actually. Let us see that question. Based on the above, answer the following question. Question number 1. Which among the following assertions are discussed with respect to employee benefit expenses? Tell me guys, which assertions are actually discussed? Occurrence, completeness, and cutoff. So which assertions are verified? Occurrence, completeness, and cutoff. But there is nothing stated regarding measurement. So they are asking us to find the choose a correct combination. So which assertions are actually discussed? 2, 3, and 4. So the correct option is B, which contains all the three options: 2, 3, and 4. Clear? So these are the assertions which are verified. So this is one observation. Regarding that observation, there is a question given. Coming to the next observation. It was also noticed that dividend to equity shareholders for the financial year 2022-23 was declared as on 15th of April 2023 and was recognized as a liability in the financial year 2022-23. Do you think it is correct? No. The liability to pay the dividend will exist only when it is declared in the shareholders meeting. So the meeting actually happened on 15th of April 2023. They should have recognized this dividend in the financial year 2022-23. Sorry, in the financial year 2023-24. Why? Because the dividend was declared in the meeting. In which meeting? On 15th of April 2023. So this dividend will be shown as a liability in the financial year 2023-24. But what you can do is, in the financial year 22-23 related financial statements, you can simply give a disclosure. You can simply add a notes to accounts, but there is no requirement to recognize a liability in the year 2022-23. It should actually form part of a liability of 23-24. Yes or no? Because the actual liability existed, came into force on 15th of April, which is forming part of financial year 23-24. Right. So let us see what is the question. Whether disclosure of dividend under the liability head during the financial year 22-23, is it appropriate? No, it should be shown as a liability in the financial year 23-24, not 22-23. So it is not appropriate. So first option they are telling yes, no, it is not appropriate. First option obviously straight away no. So this is an incorrect option. Second option, no, yes, it should not be shown as a liability. The amount should be recognized equally between two financial years. No, entire liability should be recognized only in the financial year 23-24 only. Next, no, the amount should not be disclosed as a liability. It should be disclosed in the notes to accounts. Yes, for the financial year 22-23, you can do this. Don't show it as a liability, but disclose it as a notes to accounts. Next, no, the amount should neither be recognized as a liability, nor disclosure is required. No, you can give disclosure. You need not show it as a liability, but you have to show it as a disclosure in the notes to accounts. So which option is correct? C option is correct. Next one, let us come back to the case study now. Let us read one more thing here. Another article, Krish, noticed that debtors constitute a major component of the company's financial statements. In the company's financial statements, one of the major items is debtors. As a part of audit procedure, the auditor requested the client to obtain external confirmation from the parties. So as an audit procedure, what auditor is doing? He is requesting the client to obtain external confirmation. Is it correct? You tell me, external confirmation should be obtained by the auditor directly, or external confirmation should be obtained through the client? As we have read in SEP 'five, external confirmation should be obtained by the auditor directly, not through the client. So tell me, is it appropriate procedure? No, the auditor cannot request the client to get the external confirmation. The auditor should himself get that external confirmation request. For this, a list of all debtors were obtained and a random sampling was performed by the auditor. The client directly obtained, see here, the client directly obtained selected debtor confirmation from the customers on time. Is it correct? No. Should the client obtain direct confirmation? No. See, we can ask the client to draft the confirmation request, but ultimately the confirmation has to be obtained by the auditor directly, not through the client. This is what SEP 505 says. Clear? Able to extract the facts here? From this, one question is there. Let us try to understand that question. So if you look at this question number 3, Krish pointed out that the method followed to obtain debtor confirmation in the previous year was not in accordance with SA 505. Yes. Therefore, Saha and Associates should re-perform the same in the correct manner. Last year, client obtained the confirmation directly. That was inappropriate. So in the current year, they need to redo it. So now they are asking us to choose the correct option. Let us see. As per SA 505, confirmation should be directly obtained by the auditor. Yes. Further, for all significant account balances as on the balance sheet date, confirmation should necessarily be collected, and for smaller outstanding balances, random sampling could be performed. Does this option sound good? 100%. So what option A is telling? Yes, as per SA 505, the external confirmation should be obtained by the auditor directly. Whatever significant debtors balance are there, whatever major balances are there, for all that debtors, without sampling, all the significant debtors, you get external confirmation. Whatever smaller debtors are there, there you can do sampling. Yes, this option looks 100% correct. Let us see the remaining options also. It is okay to obtain confirmation through the clients as they are in the constant contact with their customer. Option B is telling, no, auditor need not get the confirmation directly. Even the confirmation can be obtained through the client. Is it okay? It is not okay. Next one, as per SA 505, confirmation should be directly obtained by the auditor, whereas random selection can be done for all debtors irrespective of the amount. Not exactly. See, you can't do random sampling for everyone. Whatever significant are there, whatever major debtors are there, there you do 100%. Whatever smaller amounts are there, there you can go for smaller, there you can go for sampling and send the confirmation request only for that sample items. Next, either auditor or client can obtain confirmation based on time availability. No, not either auditor or client. It is always advisable for the auditor only to obtain the confirmation directly. That is what the definition of external confirmation also. If you go back to SA 505 and read the definition of external confirmation, it says external confirmation is a written response obtained by the auditor from a third party, not obtained by the client from the third party. Clear? So out of all the options, which one sounds more suitable? Option A sounds 100% suitable here. Next one. Okay, so let us go back here. What else they are telling? Krish also observed addition in the assets amounting to 50 lakhs during the year supported by sufficient audit evidence. So one of the article assistant was also verifying assets, and he came to know that during the year 50 lakh rupees of assets were added. However, upon scrutiny, it was found that some of the invoices were not in the name of the company. There were evidences, there were invoices, but on close examination, it was observed that the invoices are not there in the name of the company. So by checking whether in the invoice name of the company is there or not, which assertion you are trying to verify? See, assert is a balance sheet item. For assert, what assertions will be there? Existence assertions will be there. Then we will have completeness assertion. Then we have rights and obligations. Then we have valuation. If I am checking the title documents or invoice to find whether the bills are in the name of the company or not, title deeds are in the name of the company or not, what exactly I am trying to verify? I am trying to verify their rights and obligations. Yes or no? Next. So that's what regarding that one question will be there. Which assertion has been affected in the case of fixed assets? Company's name is not there in the name, not there in the invoice. So which assertion was affected? This assertion, rights and obligation, was affected. Next one. One more observation is there. Let us have a look at that as well. Further, cash and cash equivalents were classified as balances with the banks, checks and drafts on hand, cash on hand, and earmarked balances with the banks. No. See, they are disclosing in their financial statements cash and cash equivalents into following categories. They have given cash and cash equivalents as a major head. Under that, they have shown what is the balance with the banks. Balance with the banks. This one category they have shown. Checks and drafts on hand. That is one category they have shown. Cash on hand. That also they have shown. And under this heading only, they have shown earmarked balances. Under this heading only, they have shown earmarked balances, which is actually wrong. As per Schedule 3, earmarked funds should be shown as a separate item, not under the heading cash and cash equivalents. It should be shown separately. So if you open the audit of items of the financial statements chapter, and if you go to the cash and cash equivalents question, there if you find the disclosures as per Schedule 3, you will find that. For your understanding, I have one small image also taken from study material. I will show that to you. So if you see this here, what they're trying to say? Yes, see here. So this is actually the disclosure. As per Schedule 3, under cash and cash equivalents, first you have to classify what is the balance with banks, checks and drafts on hand, cash on hand, and others. And apart from that, after that, a separate heading of earmarked balances should be shown, not under cash and cash equivalents. So it should be shown separately, not under the category of cash and cash equivalents. So that's why their presentation is wrong. Which disclosure is wrong? Earmarked balances should have been shown separately, not under the heading cash and cash equivalents. The same thing you will be able to find it here. Cash and cash equivalents were not properly classified by the client. Which of the following is incorrect disclosure? What is the incorrect disclosure? Earmarked balances is an incorrect disclosure. So with this, we are done with the case study. So what are the options we have marked? Let us cross verify with the key, whatever they have given there. B, C, then we have A, B, C, A, B, C, A, B, D, B, C, A, B, D. Let us cross verify with the key. B, C, A, B, D. Very good. Now let us have a look at general MCQs. There are a few general MCQs also. We'll quickly go through that. So sixth one. CA Chatur provides accounting and bookkeeping services to Shiv Ganga Limited. He is also offered an audit of the accounts of Shiv Ganga Limited. Which threat to independence may be involved in accepting such an engagement? What threat is there? If you are providing accounting and bookkeeping services for the same client, you are also doing audit. Which threat will be there? Self-review threat will be there. So this we have discussed in a detailed manner. Different kinds of threats we have understood in nature, objective, and scope of audit. There we have understood in a detailed manner. So what threat will be there? Self-review threat will be there. Nothing specific here. Next. CA Sargun is conducting statutory audit of branch of KBC Bank. During the course of audit, it is noticed that one borrower has availed a housing loan and a car loan. So one borrower, one customer has availed two loans. Which loan? Housing loan also he has availed car loan also. Housing loan EMIs are overdue for 120 days as on the balance sheet date. So they have remained overdue for more than 90 days. Car loan EMIs are overdue for 60 days as on the date of balance sheet. See, car loan is not overdue for more than 90 days, but one of the loan, housing loan, is overdue for more than 90 days. So you have to remember one here. In case you have to remember one thing here. In case of banks, as per the Banking Regulation Act, if a customer has taken multiple loans, for example, one person has taken housing loan, one person has taken car loan, one person has taken personal loan, the same person has taken different kinds of loan. Even if one loan turns out to be a NPA, all the loans, whatever he has taken, all the accounts under that customer's name, every account should be classified as NPA. So that is what audit of banks says. In audit of banks, there will be a point. The NPA classification should be borrower wise, not facility wise. If one facility availed by the borrower is classified as NPA, all the facilities, all kind of loans which are taken by the customer, every loan will be classified as NPA. Okay. So which of the following statements is appropriate? Let us see. Housing loan should be classified as NPA in accordance with RBI norms and asset classification. However, car loan should be classified as standard. No, it should be borrower wise, not facility wise. Car loan should be classified as NPA in accordance with RBI norms on asset classification. However, housing loan should be classified as standard. No. Both housing loan as well as car loan should be classified as NPAs in accordance with the RBI norms on asset classification. Yes, this is the correct option. D option is not correct. Both housing as well as car loan should be classified as standard. No, both loans should be classified as NPA. Good. Last question. Sagar Finance Corporation Limited is a government company. The audit of the company is conducted by statutory auditors appointed by C and AG, who is empowered to conduct supplementary audit of Sagar Finance Corporation. As we all know, in the case of government company, auditor will be, the main statutory auditor will be appointed by C and AG. So once the main auditor, after conducting the audit, he will submit one audit report to the C and AG. Now C and AG can either order for supplementary audit or they can order for test audit. Sir, who can do supplementary audit? Who can do test audit? Once again, C and AG is only permitted to do the supplementary audit or test audit. So who is empowered to conduct supplementary audit? C and AG will C and AG is empowered to order for supplementary audit. But after ordering for supplementary audit, either C and AG themselves can do it or any other person appointed by the C and AG can do it. But who is having the power to order for supplementary audit? C and AG. Who can do it? Either the C and AG can do it or any other person authorized by them. But they are not asking about who can do it. The question is empowered. Who is having the power to order for supplementary audit? C and AG only will be able to order it. Understood, everybody? So these are the keys for, this is the answer for general MCQs. B, C, B. Let us see what are the answers. Yes, B, C, B. So with that, MCQ questions we are done. So now let us have a look at descriptive questions. Very straightforward descriptive questions are there, no much complications. So if we start reading it, question number 9, Kriti, a CA student, has joined articles in reputed audit firm. She considers audit engagement to be only assurance engagement. we understood what is an assurance engagement. The term assurance is very broader. And also, if you assurance means what? Any engagement in which you will give a confidence, in which you are checking the subject matter against the criteria, and you give a assurance, that we call it as assurance engagement. So one of the CA student is feeling that audit is the only assurance engagement. No, audit is not the only assurance engagement. So basically speaking, if you remember what is assurance engagement, three elements of assurance engagement, we have discussed one question, the nature, objective, and scope of audit. So assurance is a very broader term. Any assignment which you are doing where you are checking the subject matter against a criteria and you are giving a assurance, you are giving some kind of written report, that we call it as assurance engagement. The term assurance is very bigger term. In that assurance engagement, one of the kind of assurance engagement is audit engagement. Assurance is a very bigger term, whereas there are different kinds of assurance which an auditor can do, which a chartered accountant can do. In that, one of the kind of assurance engagement is audit. So what I'm trying to say is assurance is a very bigger universe. In that, one of the kind of assurance engagement is audit engagement. But one CA student is of the wrong notion that audit engagement is the only assurance engagement. She considers audit engagement to be an assurance engagement. She is feeling that yes, audit engagement is an assurance engagement. Her understanding is that audit engagement is the only kind of assurance engagement in which practitioners give the written assurance report in the appropriate form. Do you think it is correct? No. Audit is one of the assurance engagement. Apart from audit, there are various other kind of assurance engagements like review. Review is also a kind of broader assurance engagement only. However, her friend Somaya does not agree with her. She is of the view that assurance engagements are not just restricted to audit alone. Besides, Somaya also thinks that assurance engagements can also relate to matters other than historical financial information. Obviously, see, for example, you are an auditor and you are a chartered accountant. Some entity has called you and they asked you to verify whether their internal controls are working effectively or not and give a report on that. If you are doing that assignment, that is also assurance engagement only. Yes or no? So when I say assurance engagement, it is not just related to historical financial information. It is related to other than historical information also. Like sometimes you might be called upon by the client to verify internal controls and give a report. Sometimes you might be called upon by the client to verify future financial information and to give the report. These are also assurances only. Yes, this lady is correct. Somaya thinks that assurance engagement can relate to matters other than historical financial information also. Yes, this student is thinking correct. Whose views appears to be correct? State with reasons. Tell me whose views are correct. Somaya's views are correct, whereas Kriti, this student's views are not correct. So this you have to explain in a simple manner. The same thing, the same effort they have taken, the same kind of answer they have also suggested. So this is a very much self-explanatory. All the context I have explained in a detailed manner. Just go through the answer once, you will get the better clarity. So I have explained, as a part of my explanation, I have made sure that some examples which are there in the answer are also covered. So just go through the answer once for better clarity. Next. Coming to the next question. This one. CAN engagement partner of LPS and Associates is planning for audit of a large company. As a part of preliminary engagement activities being performed in this regards, he wants to ensure that compliance with the independence requirements. As we all know, while performing audit, first we do preliminary engagement activities. What are preliminary engagement activities? Drafting the engagement letter, communication with the previous auditor, checking the compliance with the ethical requirements, checking the compliance with the independence requirements. These are all preliminary engagement activities, no? So in that process, while conducting audit, this auditor, as a part of preliminary engagement activity, they want to check if they accept this audit, whether they will be able to comply with the independence requirements or not. How shall he form a conclusion that audit firm complies with the independence requirements or not? Whether the firm is complying with the independence requirements or not, how you can get that confirmation? So when you are accepting audit, first you need to perform preliminary engagement activities. As a part of preliminary engagement activities, you have to confirm whether your firm is able to comply with ethical requirements or not. Now, how you will get to know whether your firm is able to comply with the ethical requirements or not? So this question is from Audit Strategy Planning and Program. If you refer our material, there will be one part at the end of the chapter, preliminary engagement activities. There we have explained in detailed manner what things you have to obtain, what things you have to check to know whether you are complying with the independence requirements or not. Anyhow, I will take you through the answer here also. So the engagement partner CAN shall form a conclusion on compliance with the independence requirements. But how he will do it? He will obtain relevant information from the firm. Nothing but he will go to each and every person in the firm and he will get the information from them and he will evaluate, are there any relationships with the engagement team members, between the engagement team members and the client, which create a threat to independence. So that is the first step. As an engagement partner, you have to go inquire with the engagement team and identify, are there any relationships that create threat to independence. In case if you identify any breaches of the company's independence policies, you need to check, is it creating a threat? Now, if you came to know that, yes, there is a threat to independence, now you have to evaluate, are you able to eliminate that threat? If you are able to eliminate that threat, well and good, eliminate that threat and then accept the audit. If you are unable to eliminate that threat, either don't accept the audit unless it is required by law or regulation, or if you have already accepted the audit, then you have to withdraw from the audit engagement. As simple as that. So simple 3 steps, guys, how you can get to know whether your firm is complying with ethical requirements or not. Number 1, you have to first obtain information. On the basis of that information, evaluate, is there any threat to independence? Yes, if there is a threat to independence, you have to check, are you able to eliminate it? If you are unable to eliminate it, either don't accept it. If you have already accepted it, withdraw from the engagement. Simple. Important question. Next one. Let us come to the next question. Companies are increasingly using data analytics for managing their operations. Auditors can also obtain good results by using data analytics. What are the tools and techniques used by the auditor in applying the principles of data analytics, and which areas data analytics can be used by the auditor? This you will find it in our material in the chapter Audit in an Automated Environment. Straightforward question, what is data analytics and what are the uses of the data analytics? The same answer you will be able to find it even in the material also, exactly copy pasted information. The tools and techniques that are used by the auditor are known as computer assisted audit techniques, and some examples are also given, IDI, ACL. And for what purpose you can use the data analytics? For checking completeness of data, for selection of samples, for recomputing the balances, for performing mathematical calculations, for doing fraud investigation, and even to find out control deficiencies. Next, so in our material you will be able to find it in the Audit in Automated Environment. Next question. Quality Products Limited is engaged in manufacturing of bicycles. As a part of manufacturing activities, it sends raw material to some business entities and procure finished components from them. Nothing but this company is sending their products on job work basis. They will send the raw material, some other person will manufacture it and send it back. As on 31st of March 2024, inventories lying with such business entities are material inventory held in the custody of third party. Some third party is holding the inventory. Some third party is holding the inventory. Then what you should do? So inventories are lying with the third party, which are material. So immediately, which standard should strike your mind? SA'501, obtaining audit evidence regarding the inventory lying with the third party. Being statutory auditor of Quality Products Limited, how will you obtain sufficient appropriate audit evidence regarding existence and condition of inventories lying with such business? So how you are going to obtain evidence regarding existence and condition of inventory? How you are going to obtain the evidence regarding existence and condition of inventory? In case of inventory lying in the custody of third party, this in SA'501 we have understood in a detailed manner. The same thing they try to explain it here. So as you could see, first what we will do, we'll try to obtain external confirmation. In case external confirmation is not reliable, then we perform inspection and also other procedures. Like what could be that other procedures? We can inspect the documentation. We can request a confirmation from a third party, and also we can arrange for another auditor to go and attend the inventory verification on our behalf. And also we can use the other auditor's report if available. So SA'501, guys, straightforward question. I hope you'll be able to manage this. Next one. Let us have a look at the next question. So let us have a look at the next question. The next question is from audit of items of the financial statements. So what they are trying to say here, let us see. The financial statements of XYZ Limited show long-term borrowings from the banks, financial institutions, leasing and hire purchase companies. Additionally, the company has also issued debentures to its 1,000 members to raise funds in accordance with the provisions of Companies Act 2013. Okay, majorly they are talking about borrowings. The money raised by issuing debentures is also reflected in long-term borrowings. As a statutory auditor of XYZ Limited, CAX wants to verify that all borrowings on the balance sheet represent valid claims by the bank or other third parties. Nothing but what you will try to obtain, what things you will try to verify regarding existence of the borrowings. Straightforward question from the material. So you open the question, how to verify the borrowings. There will be few points under the existence. That point you have to write. I hope I need not explain it in detailed manner because it is a straightforward question. Next. So then audit documentation. An important factor in determining the form, content and extent of audit documentation of significant matters is extent of professional judgment exercised in performing the work and evaluating the results. Explain, stating clearly the examples of significant matters. Once again, straightforward question. In the chapter audit documentation and audit evidence, you will be able to find what are the examples of the significant matters. So what are that examples of the significant matters? You will be able to find it here. So this same question will be there in our material as well. So nothing but in your audit documentation, you should include significant matters. But what are significant matters? Give some examples, like matters which give rise to significant risk. If you have performed audit procedures and on that basis you have concluded that financial statements contain a material misstatement, or there is a need to revise the risk of material misstatement, that is one example of significant matter. Or the circumstances which create significant difficulty in performing audit procedures, that could be a significant matter. Or findings that could result in a modification. You have some findings because of which you are required to modify your opinion. That could also be an example of significant matter. So these are the few examples of significant matter. Same question will be there in the material as well. So no twisting of the questions here. Now, let us have a look at the next question. Question number 15. CA Manoj is a statutory auditor of a company. He has completed the audit and issued the audit report dated on 30th of June 2024. He signed the audit report on June 30. Before signing the audit report, written representations dated June 29, 2024 were obtained from the management. So he obtained written representation. On the written representation date is what? 29th of June. Discuss the significance of the date of written representation. So what is the importance of date of written representation? Also state whether the written representations obtained on June 29, 2024 is appropriate or not. So this is a question from SA 580. As we have seen in SA 580, they say specifically that the date of written representation should be either on or before the date of auditor's report, but it cannot be later than the date of auditor's report. And also, if you see here, in the given case, audit report was dated on 30th of June, whereas written representations were dated on June 29. Is it valid? Yes, it is valid. Here in this case, written representations are obtained before the date of auditor's report, which is actually a good thing, which is valid. The same thing you are supposed to write in the answer. So you can refer the answer for more clarity. This is a question from SA 580. Next. While conducting audit of BYN Limited, CA notices that company has lost one of its key markets along with important customers. Additionally, several high successful competitors have emerged, nothing but indicators impacting business of the company. Immediately, SA 570 should come to your mind. Despite the existence of material uncertainty, CA finds the use of going concern basis of accounting appropriate for preparation of financial statements, and the company has also disclosed material uncertainty. Nothing but going concern is appropriate, but there is a material uncertainty regarding going concern. Management also did not hide anything from the shareholders. They have clearly given a disclosure regarding material uncertainty. Now, what you should do? What are your responsibilities? So, going concern is appropriate. There is a material uncertainty relating to going concern. Management did not hide anything regarding it. In the financial statements, they have given a clear disclosure regarding that material uncertainty relating to going concern. What you should do? Will you give modified opinion? No, we will give unmodified opinion only. But in our audit report, we will add one more paragraph, material uncertainty relating to going concern. There we will highlight what disclosure has been given by the management regarding going concern. Straightforward question. So we understood the concept in a detailed manner in SA 570. The same thing you'll be able to find it in the answer. No need to modify, just you have to add one more paragraph, material uncertainty relating to going concern. Now coming to the next question. This is regarding CARO, straightforward questions. Discuss the reporting requirements as per CARO regarding statutory dues and transactions with the related parties. So regarding statutory dues, as we know, statutory dues, two kinds of disclosure, undisputed, disputed. Regarding undisputed, whether the company is regular in depositing all the undisputed statutory dues. If not, arrears of the amount outstanding for more than 6 months that you have to report. In case of disputed, what is the amount involved in the dispute and forum where the case is pending. Whereas in case of transactions with the related parties, here you have to check whether the transactions of the related parties are in compliance with section 177 and 188 of the Companies Act, and whether they have been properly disclosed as per applicable financial reporting framework. So these are the reporting requirements as per CARO. The same thing you are supposed to write here. Next, coming to question number 18. Section 77 of the Multi-State Cooperative Societies Act 2002 states that the central government may at any time by order direct that a special audit of the multi-state cooperative societies account for such period or periods as may be specified in the order shall be conducted. Nothing but in some cases central government can order for special audit of a multi-state cooperative society. Further, it may be the same or a different order, appoint either a chartered accountant or a multi-state cooperative society auditor himself to conduct special audit. Okay, now what is the question? Under what circumstances the central government will order for special audit? In which circumstances central government will order for special audit? So there will be 3 cases under which central government can order for special audit. So what are that 3 cases? So you will be able to find here the 3 cases where the central government can order for special audit is that the affairs of any multi-state cooperative society are not being managed in accordance with the in accordance with the cooperative principles, or society is being managed in such a way that it is likely to cause a serious damage or injury to the interest of entire trade or industry, or the financial position of the cooperative society is is in such a nature that it is in the danger of insolvency. Next one, last question we have. So what is the last question? Last question is regarding calculation of drawing power from the audit of banks. No, not last question, last but one question. So they are asking you to calculate what is the drawing power. Compute the drawing power for cash credit account of Kirpa Limited for the month of March 2024. What are they? Stocks 60,000, debtors 55,000. Sundry in that debtors also 15,000 for invoice on 20th of October. So which is more than 90 days, you should not take that debtor. Sundry creditors 10,000. Sanction limit is 48,000. So we all know how to calculate the drawing power. First, you have to take the stock. From that, you have to take out creditors. Whatever balancing figure you get, that we call it as paid stock. From that, we have to reduce the margin. Then we have to take the debtors. From the debtors, we have to reduce ineligible debtors which are outstanding for more than 90 days. So that debtors balance, you have to take it out. Whatever balance is there, from that, you have to reduce the margin. Whatever figure you get, that will be your drawing power. But you have to make sure that drawing power is always either within or equal to the sanctioned limit, but it cannot go beyond it. So if you do that calculation, we can cross verify the answer here. This we have done multiple times. In the given case, stock is 60,000. In that, creditors are 10,000. If you take it out 50,000, margin is 30%. On this 50,000, 30% margin you have to apply. It will come to 15,000. The total drawing power on stock will be 35. Total debtors are 55. Ineligible debtors are 15,000. So balance will be 40. Margin is 40%. If you take it out 16,000. So drawing power on debtors. Sorry here. So margin at the rate of 40%, you have to take it out. Okay. Eligible debtors are 40,000. From that, you reduce the margin. I think here something is wrong. From the debtors, you have to take out the margin. 40,000 is the debtor. Okay. From that, you have to reduce the margin of 16,000. If you reduce it, there will be 24,000. So if you take that 24,000, it should be 24,000. So 35,000 plus 24,000, it will come to 59,000. But in the given case, they have clearly told, in the question, they have clearly told what is the sanctioned limit. So what is the sanction limit given in the question? Sanction limit is only 48,000. So whatever it is, the drawing power can't go beyond the sanction limit. In the given case, the drawing power has gone beyond the sanction limit, but the sanction limit is only 48,000. So in the given case, drawing power also will be 48,000 only. So here it will be 48,000 only. Able to understand, everybody? Okay, so here there is a mistake here actually. Either anyhow, it will not have any impact on the answer. 55,000 minus 15,000, it will be 40,000. You have to reduce the margin at the rate of 40%. If you reduce that 16,000, the amount will be 24,000. Drawing power on debtors will be 24,000. So total will be 59,000. But anyhow, it will not have an impact on our answer. Okay, right. Next, let us come to one last question. Whatever we have. So what is the last question which we have? ABC and Associates, an audit firm, has been approached by the prospective company client that has been in business for about 10 years to conduct an audit of its financial statements. Before accepting the audit, engagement team, the firm wants to assess the integrity of the prospective client. So one of the most important which you have to do before accepting the audit, you have to check whether client is having integrity or not. With regard to the assessment of integrity, what matters you will consider? Whether the client is having integrity or not, how you are going to decide, what factors you will consider in taking that decision. So these are the factors which we will consider for taking the decision. Like we have to identify what is their identity, what is their business reputation of managers, owners, what kind of operations they are doing, what are their business practices, what is the attitude of the client's principal owners, what is their attitude of the main owners of the company, whether the client is aggressively concerned with maintaining low fees, are they always concentrating on cost cutting, and also indications of inappropriate limitation. The client is not permitting you to do your work properly. Unnecessarily, they are putting a lot of limitations, or indication that the client might be involved in money laundering. So these are the few examples. These are the few examples of the factors which you will consider in determining whether the client is having integrity or not. So that's all, guys. These are the descriptive questions which are there in the RTP. Yes, very simple one, not at all complicated. But my humble suggestion, please go through the RTP once on your own completely and try to understand it. Okay, right, but never miss it. That's all for now. See you in the next video. Bye everybody, take care.